We're back, baby. The fam. And after a month and a half, you and I, we sit in the same place, absolutely ready for what's to come. I gotta tell you, I'm so pumped. Money is ready, deployment is ready, and I know you fam gonna be so ready for. I mean, just like what's happening, everybody, and welcome. Cheers. We'll go ahead and let you to do its work. Finally back to my time zone. First live in a while. And we got the prices right here. We got everything. How we all doing? Feeling good, man. Feeling good. Let's go. Alrighty. My man Bulldog in the house. There you go. Letting you to do its work. I gotta tell you, we're ready to do our work. We're ready to do what we gotta do. Perfect. Oof. Guys, you and I know it. It's about to get very, very interesting. It's tradition here in the channel. We go ahead and watch the FOMC. Coming in a little earlier than usual because, well, it's the first one in about 6 days. Typically, we have a live Sundays, but I couldn't do it this past Sunday. We had a few issues here and there, but we're back. And everybody, to all my community, the day has come that we are going to see a rate pause, more than likely, right? But it's all about what Jerome is going to say and how things are going to be moving. I'm sure that you guys have your strategies ready, locked and ready. So I'm just like, man, bro, gonna be good. Bulldog in the house. Up, Josh. DH writes, welcome, fam. Happy to see people filing in. I think the whole world is right now, paying attention to what's to come. We have China. We have, obviously, even right now, Canada. There's a bunch of deals to be made. Trump is like, they got to come to the table. We don't. I was, listening to what he was saying over the last couple of days. I know that every time we have a Monday morning, there's going to be tons of different press conferences and sit downs. And you more than anybody know that we just have to get ready for what he's going to say. We always have to get ready for what he's going to say. Hey, what's up, Randy? More delay coming. You gonna pump it up? How we doing? We're doing good, buddy. It's always good to be back home. Dubai was phenomenal. Finally got we got a chance, fam, to tell you, to all my community. I definitely want to go back. Now my team is preparing us to go to Singapore, right, for Token 2049 Singapore that I attended last year. And well, that one is gonna also be very crazy. I know. I mean, now that I have attended the two Token 2049s, I'm just more excited, man, to work, to get in the zone and to just deliver greatness. What's up, John 316 in the house? Welcome, buddy. Yeah, I mean, there's no way that I'm gonna stop doing this. I see me doing this for years now, because I want to obviously wait and see for our awesome bull market. The daily candle, guys, for XRP, we still see the tariff drop at 160. We're at 211. It's been a long and painful and consolidated journey, as some of you know, from the $2 back, about to be a month, all the way, right, till right now, 20 something days later at 211. So yeah, not the greatest rally per se, right? But we're no longer in the 160s, which is good. The one of the big things that occurred was OM, right? Devastating, chance for OM mantra from $2, $6 all the way down to 30s. So that was obviously, terrible for them. And they burned. They did everything they could, They burned a lot of money. But no, it's not really helping the token. So they burned millions of dollars and still the token is like this, completely collapsed. Yeah. I had some positions longs, I closed them all. So the shorts are really having a blast. Shorts are making a lot of money. So when I tell you that people are obviously making bank, because even though if the price goes down, there's a lot of people that are shorting and are very excited, to make that money. Welcome to the 300 people watching us right now. How we doing? First live in a while. I want to thank you guys because I'm seeing people coming back on YouTube, coming back to the video. So that's really nice. So we're watching everything. We're ready for everything, You think we're going to be pumping or dumping after the FOMC? Ricky, that's why I have some cash on the side, because if we dump, I'll be pleased that I've been waiting. I'd be pleased. What's up, Imad? GS in the house. Welcome, buddy. So I'm so happy, to be back and then to see the fam and now be here from the studio. But it's always really good to meet with people that are winning, that are in the industry. Talk to a bunch of people, in Dubai that have a tremendous impact in the MENA region, right? I saw CC live, right? I was listening. I was so close. I went in super early and I went all the way to the front. So I had him, much closer than Vitalik last time. And yeah, CC, normal guy, just worth billions and billions of dollars, of course. It's a lot of money. Or BNB. He knows what he's doing. BNB, Binance, obviously are not going to go anywhere. I think, Binance is literally not welcome in the United States, fully embracing all their crypto exchange. But you know something, fam? The United States, when it comes to crypto, is not that relevant for the world, If the United States closes its doors to the world as far as crypto, right? Crypto will still continue to move. It's like it doesn't really make much of a difference. It helps a lot now that we have Donald Trump, pushing regulation and letting Congress and the executive, be more aggressive in crypto. That's very bullish. But yeah, right now, it's as far as what Dubai and all the different regions are helping crypto, are literally welcome crypto. That's the industry is going to prevail. The industry is going to prevail no matter who is in charge. No matter who is in charge. So I like that, man. What's up, Tom? Good to see you, buddy. Welcome. I don't know, bro. Every time we get good news, we still dump. Angel, well, I'm happy about that, If every time we get good news, we dump, then we're right on. Why? Well, because you're buying the dips, man. You're buying the dips. Right now, this is where we're going to be watching the FOMC. We got about 30 minutes to go before the decision, before what they say. And, I see a lot of people voting for a pause. Oh. Guys, I slept for like 12 hours yesterday. I'm so bewildered by the fact that I don't do that ever, but went to bed at 1 a.m. I woke up at 1 p.m. I'm like, what just happened? Finally, the jet lag caught to me. Finally, I was able to relax because I was, 13 hours or so ahead, So I'm not someone who really gets jet lag, but I think just the fact that I slept so much, it was like, okay, I was able to reset my clock. Man. Indeed, bro. Pause the rate, right? Carry game looking on point. Hey, thank you, buddy. Appreciate it, Dan. Yeah, that's why I cut it all the way. Remember last time that people were calling me like people were making fun of my haircut. But now it looks much better, it's my hair game is a long-term game. 30 minutes from now, either we all gonna be rich or get liquidated. I mean, we'll see, man. We'll see. But got my fries ready to pair with this burger. Yeah, I mean, we all are watching. There's gonna be tons of speculation, but oh boy, I'm ready. Now, what do we have here? Bunch more news when it comes to crypto. Let's take a look. FOMC predictions. It's gonna be a pause, right? Now, if it's not a pause, fam, oh boy, you and I will be so excited with what the outcome is gonna come. Why? Well, because it's gonna be the volatility that we need, man. For XRP, for Bitcoin, for Solana, for all these different cryptos, right? All in on XRP, for sure. I've been doing that, and it's been paying off. Right now, that we're less than $3. It's a few coins that are doing well. Pepe is decent. Bread is cooking for me, which is good. Some of the ones OM, it just keeps going down. Cardano actually is selling off a little bit. I've been buying some Cardano, some Algorand too. ISO 222. Why not? Ondo is another good one too. So all of these coins are gonna be doing what they know, right? In due time, it's coming. Ethereum getting an upgrade, right? I showed you earlier today, Ethereum, which is pretty nice. I mean, ETH. I know a lot of people are already giving up on Ethereum, right? Which makes sense. I mean, the Pectra is live on the Ethereum mainnet. Pectra. So upgrading progress 7 hours ago, and now hours later, live. Community members will continue to monitor for any issues over the next 24 hours. Guys, I'm bullish in crypto. I'm bullish, on all of the other top blockchains, and Ethereum is obviously one of them. Go back years ago, and Ethereum was leading the chart. Even Base is right there saying it. They like it. So as Ethereum goes up and continues dominating smart contracts, that's just going to help everything as a whole. Remember that, World Liberty Financial, Trump's company, right? They are all in on ETH too. So there's a lot of people, keeping an eye on it. Keeping an eye on it for sure. What's up, Yash? Good to see you, buddy. Welcome. Every man his breaking point. I think Jerome Powell found his. I think it might be a 25 basis cut. Robert, please let him listen to you, bro. Imagine. Chipper, what's up, bro? Chipper here. Good to see you, Chipper. Let's go. You didn't get the notification, Chipper. Classic YouTube. Yeah, I think it's a little slow. Sometimes I get a bunch of you fam in seconds after I click live. Other times, YouTube is like, oh, you haven't been live for a while. I'm not gonna tell anybody, so you find out super late. It happens. Christian, you used the link for BTCC. Send it, brother. Guys, I got a few things. Boom. The BTCC, I got a few things over there too. So they took us to a yacht party. Got to meet a lot of great people there in Dubai. A Dubai only invite, and it was nice, man. It's great when you are partnering with an exchange, and I'm asking questions like, "Hey, gotta make sure you guys are fully legit, of course." And I knew that even before I went to Dubai, right? Talk to the people, talk to real people, and yes, and they have. Now I really understood, right? Talking to a BP, his name is Daniel. He's super smart, man. So they are like BTCC. I didn't know, but BTCC stands for, well, I didn't know because it's not that public per se, but it stands for Bitcoin China. One of the first exchanges ever. So they used to just do Bitcoin, right? In China. But because China went against digital assets years ago, go back to 2015, 2016 or so. It's always like China is shutting down, China is banning, So they left China. And now they're in Hong Kong, which obviously is separate. Chinese, but separate. Hong Kong welcomes all crypto. Hong Kong is like bullish crypto. So that was pretty neat. And now, since a few years ago, BTCC has been pushing and pushing and pushing in different markets because there's new leadership. That's nice. That's nice. So I'm gonna keep you in the know with all of this because I want to win and I want you guys to win too. There's so much opportunity and there's a lot to come. A lot to come. What's up, Christian? Buying all those dips, my man. I goes, what's up, buddy? Yeah, I mean, I met the real people there, and they're hiring also aggressively. There's all kinds of opportunities right now. There's a bunch of exchanges that are also doing well, and they want a piece of the pie. So makes sense, man. Everybody's getting ready for the bull market. In the bull market, it's all gonna go ballistic. It's just all gonna go euphoria, and I mean that makes sense. But seeing it, right, face to face, seeing it, it's much better than just hearing it from someone on Telegram. And I'm here to tell you, face to face, like what's really happening. Welcome, Pam. Welcome to the 800 people joining us for the FOMC Live. We are early. I decided to come a little earlier than usual because of it's been the first one in a while. Yeah, man, it's like you only get to go up from here. Like you just keep learning, keep growing, keep asking questions, keep meeting with people right now. That's the way it is. Hey, Oscar, my man, what do you think about TARS AI performance now? I haven't seen lately, but it was doing really well. TARS AI. Solana, incubated AI. Legit, man. Fabio, good to see you, buddy. Welcome. I don't have any virtual, Carlos. I know it's been doing really good, but I don't have any. What's up, Chipper? Yeah, lots of pictures with BTCC. They really are welcoming our team. They're really welcoming me. Because I'm from Mexico and I know Spanish, and I'm one of those few that know Spanish. We're cooking something in Spanish for my audience, right? So I'm using all my value utilities. I'm using all my utilities, right? To bring crypto to the world. And yeah, it's gonna be really nice to see what we could do for our Spanish speaking audience. Is Shiba dead? It's not dead, man, but we got Ethereum. We really need that Ethereum rally to Pepe, Shiba Inu, more different ERC20s. Yep. XRP is disappointing. Well, why you think it's disappointing? If you think XRP is disappointing, I think you're just looking on the price, right? If you're just looking at the price right now, okay, do you, right? But that's not everything. If I was looking at the price on everything, that's not the right way to analyze crypto. Out of all the speakers in Dubai, not many care about the price, guys. They know it's going to do well. They know money is coming. They're not worried about the price. There's always questions about what is the Bitcoin prediction, right? Yeah, we always get that question. People are saying 500,000 to 1,000,000, 250,000. But if you're worried about the price alone, you're going to be disappointed. You're going to be, you're not going to enjoy the journey, man. Money is going to come to those who wait, to those who get it, right? And it's going to come when you least expect. Your job is to get ready for it. That's why people get tired and they flame me in the comments, right? I don't care, but it is what it is. I'll take that when I say prepare now. Because a lot of people will buy the FOMO and they will blame it on someone else for not buying the dip. If that's going to be you, stop being a child and become an adult quickly. No one knows when the pump is going to come. But I saw it in Singapore and I'm seeing it in Dubai right now. Guys, gotta be real. For sure. What's up, Mark? Good to see you, buddy. Welcome. Just hit 800 XRP. Let's go, bro. Thank you, Ghost. Glad to have you, buddy. Welcome. Trump is talking. Yeah, he might be speaking right now at a press conference in the Oval Office. I'm not sure, right? But he's definitely always in the move. On the move. It's coming in 2050. Imagine, but 25 years from now. No, man. What's going to happen is that this is not going to be like, oh, it's going to be just little by little by little. It's going to be pumping by 5%, 5%, 5%. No. It's going to be like 5% and then 25% and then 50%. It's going to be a nice mega explosion, right? Once the market feels like it's time to go all in. It's the way it's going to be. People will want to start selling, right? They will want to start dumping price, but it's going to be so much the buys that will just go skyrocket. It's not going to stop it. So, Frank? Exactly. Yes. Luis, what's up, buddy? Hey, yeah, I'm glad to be back too. Really, really nice. When it explodes, people are going to be caught off guard and then it will be too late. Yeah, I mean, what's going to happen is they'll have to wait till the next cycle. And oh boy, I don't want to. Nope. Forget about it, bro. Look, I'll be honest with you guys. I mean, in 2021, I watched so many people and a lot of people told me, it's coming soon, right? I was starting. I've waited 4 years and it's 2025. I'm like, by 2030, we should have at least one mega bull cycle, which is happening sometime this year and next year. At least one. So by 2030, guys, many of us were gonna be set. And when I mean set, it's like financial freedom. That's it. It's over, right? Now you are an elite an elite class of traders that have a bunch of resources to spend to do whatever you want. Because I'm not waiting for the next bull cycle to no, forget about it. I'm not waiting 5 more years, 4 more years. No, get away from here. I'm not. Like by then, it's gonna happen. It's gonna be a different conversation. We'll see. But right now, this is my time to become elite. That's it. If I've waited all these years, I'm gonna become an elite. I'm gonna be inside those groups, right? Period. Like I'm already in some of those groups because I'm putting myself in the right position, putting myself with the leaders of regions, right? I was there and talking to a bunch of locals in Dubai that are founders, and talking to people saying, "Oh, my dad is the owner of this, plants and companies and all of that." I'm like, whoa. Money is not a problem in Dubai for those people, right? There's not, bro. It's like, wow. Welcome, fam. Oscar Ramos Live. Welcome to 1,000 people joining us today. So 15 minutes to go. We got the poll right now with almost 1,000 votes. FOMC will rates today, will cut, will pause, will hike. Everyone is expecting a pause. If you see this candle go up massively or down massively, then we didn't get a pause. Simple as that. Simple as that. Oscar saw the jets in Dubai. It was crazy, Yep, indeed. Indeed, bro. XRP is cheap right now compared to where it's headed. Oscar, don't you have financial freedom right now? That's a great question, bro. I do, but I'm talking about it at like a next level of financial freedom, bro. I do have it to a certain extent, praise the Lord, but I'm talking about the financial freedom that we all see on X, pictures and stuff like that. But I mean, it depends who you ask. We're all not in the same boat, We all have different targets, different strategies. It's good, man. There are the pump classes, so we'll go up. Pinhead in the house. What's up, buddy? Good to see you. Don't you know, pump it up. You got to pump it up. And don't you know, pump it up. Are you ready? There it is. Good afternoon. Oh, yes. And then we go down and up. It was great to see CZ, of course. A bunch of great questions. The public loves CZ. Hey, we're live. Perfect. There you go, guys. There you go. We are live. There it is. Perfect. Alrighty. Crunch. Thanks so much, buddy, for the kind donation. Appreciate it. I'm getting ready to put a position in BTCC, in XRP. Not sure if it will be a long or short. Waiting to hear Jared Powell's. Brother, well, thank you so much for the kind donation. And two, me too. I got some money on the side ready. I don't want to do anything until I, number one, get the decision, and two, hear his tone, right? His thoughts. So, yeah, that's what I'm waiting for right now. It's already live, and we'll be able to see in a few more minutes what what the FOMC is cooking. So don't go anywhere, fam. And if you have any questions, just let us know, and we'll be here for you. If you have an X and if you want to follow us and take a look at what we're saying, the fastest way to get to me, right, as far as reactions go, this is it on X. So there's the link in the chat if you haven't done it, no worries. So good news for crypto.com. Shout out to them, right? For Chronos, we got an ETP. Guys, I reposted this one because I won, Grand Theft Auto 6 so bad, but it's now next year. Can you believe it? Oh my, this is so crazy, man. Trump, I want crypto. Hear this.
I want crypto. I think crypto is important because if we don't do it, China's going to. And it's new. It's very popular. It's very hot. If you look at the market, when the market went down, that stayed much stronger than other aspects of the market. But I want crypto because a lot of people, millions of people want it. I don't know if you know that Biden went after it violently, and then before the election, he changed his tune entirely. His head of the SEC, everybody changed their tune. You know why? Because there were hundreds of millions of people that are participating in crypto, and they wanted to get their votes.
You see? So Trump gets it, which is good. Obviously, he has his own advisors. World Leader Financial person was there, right beside Eric Trump. So Don Jr., Eric Trump, and a bunch of smart people, smart cookies are making a killing with World Leader Financial. I gotta say it, man. Like they know how to make money. They know how to make money. Isn't this picture so good, fam? This is not my picture, but it's someone else's picture. I just loved it. Absolutely loved it. Yeah, that's trash. Release GTA. I know, man. I want GTA so bad. I bought a PS5. I told my wife, I bought this PS5 like a month ago. I'm like, okay, I'm ready. I don't want to play in the computer. I want to play in the console. And then they delayed, man. Oh, man. It's bad. Following you from Brazil. Let's go, Delman. I met someone from BTCC. This guy is from Brazil. I love his accent, and I was speaking a little bit Spanish with him, and I could understand his Portuguese. He could understand my Spanish because it's so similar, right? So it's nice. Oscar, what's the max ROI? And I can go with future leverage. Can I exceed 100%? What's max ROI, return on investment percentage, and can I future? Well, depends. What leverage you're using, Sultan. What's up, expert Rotary? Well, you're early, man. No worries. We're about to get in 8 minutes the decision. We're gonna get the press release and then the decision, right? So no worries. You should be getting it very, very, very soon. But you're starting to see, Ethereum coming down a little bit, XRP coming down a little bit, as we are getting closer and closer to the rate decision, which according to the CME, I've shown you guys it's gonna be, but get ready. I already have my phone prepared to make some good plays. Why not? I think let me just give you, let's go to XRP. Let's go to the 4 hours. 208 is my level right now to watch. Right here. This is a level I think to consider, right? Going down for a nice, 1% could happen very, very, very quickly for XRP. And a $2 drop, I consider not to be viable. I don't see that as realistic after the decision. But I think a 1%, 2% wouldn't sound bad. Just because, people always sell off very, very quickly with a decision, right? So I'm watching this level. If that's the case, I'm going to have my phone ready. Of course, I have it ready, but I need to go to BTCC and everything ready. Okay. So gotta move the money from the wallet to spot trading, right? So transfer Gotta do from wallet to spot trading. And once it's in spot trading, then you can go to spot trading and you can finally start buying in. So whichever one, Bitcoin, Solana, XRP, you can do limit order, you can do market order. I always like to do market order. That's just me. Just I want to buy it immediately, like right now, and that's what I do. So yeah, I'm now locked and ready here on BTCC. I'm also ready on BingX. Let me see. I think on BingX I do have. I don't know if I have on BingX USDT. No, on BingX I'm already maxed. So BingX no, but I also have weeks. So fam, we're just getting prepared, man. You see? All right, should be fun. Should be fun. What's up, Pepe? Good to see you, buddy. Welcome and welcome to all everybody jumping in right now. 5 minutes to go for the decision. The FOMC is already live, as you know. They're already getting ready for whatever they're about to speak. We'll be listening. I'll go and mute it, and there you go. Fed will cut rates if you have your glasses on. Okay. Let me clean it. Let me clean it, guys, before I put them on. Don't you know? Pump it up. You got to pump it up. Look at it. They're still selling OM. They're still selling OM. Crazy. There you go. Now I can see much better. No cut, boys. June instead. Yeah, I mean, June is what's going to basically happen right now. I'm ready to deploy some good cash there. I'll update everybody soon. Right now, let's take a look at what are the news right here. Trump has just said not open to pulling back the 145% tariffs on China, not to potential for pulling back tariffs on China. Okay, so he's speaking right now. But oh boy. We're over 36 trillion in debt. We have 2 trillion deficit. We are not at war with anyone. Why will we spend a record-breaking 1 trillion on the military budget? And Johnny Deaton comes in, the XRP Ripple legend, right? I served 7 years of active duty in the Marine Corps, so trust me when I say I believe in a strong military, but throwing more money at it doesn't necessarily translate into greater strength on or more effective military readiness. I'm not in the military, so I'm never going to give my opinion on this because I don't understand it, right? I'm going to let the experts speak on it, right? So some of you guys are veterans too, so shout out to you. Thanks for your service. So prepare. Let's go to the Fed right here. Fed. They're going to be posting very, very soon. 3 minutes to go, and we should be in the right play, guys. They're some of the top gainers right now. When will you shave your head? Oh boy. What's up, Jose? Good to see you, buddy. Red candles incoming. Oh, we're ready. We're ready. Thank you, iGhost. Welcome, buddy. Happy to see you. Oscar Fed says that we'll cut rates if you have your glasses. Virtual good price. Let's go to the 15 minutes right now and see where things are going to be heading right now. Very good. This is XRP. Let's go to BTC right now. Coin market cap. We'll open up Bitcoin. We'll open up Trading View. And we'll do 5 minutes. There it is. All right, fam. There we go. Got the 5 minutes right here. 96,000 BTC. Like I wanted to buy yesterday, but I knew that I had to wait. You better wait. There's no rush, you know? No rush. Are we ready for this, guys? Put in the comments your predictions. What is it gonna happen? Everyone is expecting a pause. And the decision. And the decision is hashtag FOMC. Latest. And the decision is 1 minute. You gotta wait for the press conference too, right? But we're gonna start getting an idea of what's to come. If it starts mega pumping, there it goes. And we got a pause. Pause, 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 pause. As expected. There it is. Guys, breaking news. Just released right now. Fed leaves rates unchanged. No change. Watch your guru. Breaking. Federal Reserve leaves interest rates unchanged, remains the same. As expected. There you go, guys. Pause wins. Pause wins. All right. Now, we were right with our prediction. Right now, we're seeing some comeback right now with the price to 12. Price of BTC right now coming up a little bit too. XRP price at the end of FOMC conference. Welcome, XRP holders. How we doing, guys? Now we are gonna be on a what if. Pause for the for the third time already. There's not being a cut in 2025. This guy is not giving in to Donald J. Trump. He is gonna cut when he wants to cut. He is gonna cut when he wants to cut. When the entire FOMC, wanna cut. That's what's happening right now. QT continues. QT continues. Let's take a look at this, everybody. Although swings in the net exports have affected the data, recent indicators suggest that economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at a low level in recent months, and labor market conditions remain solid. Inflation remains somewhat elevated. Inflation. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the long run. Uncertainty about the economic outlook has increased further. The committee's is attentive to the risk on both sides of the dual mandate. The risk of higher unemployment and inflation have risen. In support of its goals, the committee decided to maintain the target range for the federal funds rate at 4.25%, in considering the extent and the timing of additional adjustments to the target range for the federal funds rate. The committee will carefully assess incoming data and development and the balance of risk. Yeah, the same thing that we've heard in the last forever. The same. Voting for this was Powell and a bunch of different people. Well, guys, crazy. But once again, we get a pause. Oh, man. Sometimes you just want to see, the United States go a little bit more bold, but under Jerome Powell, things are not. I mean, he only has less than a year left. And believe me when I tell you this, when it's time for Trump to appoint a new chair, oh boy. I think that really is going to kick in with the bull market, man. Yeah. That's going to be very, very nice. With the bull market. Firepower. Man, you kind of want to already see, some sparks in this market. You already want to see, some big gains or so, but it's just not the case. Sometimes there's not much to do right now. Am I buying right now? No. Not yet. Next FOMC is in June, perhaps cut. I mean, the CME is already saying that it's going to be a cut, right? You'll own nothing and be angry. What's up, Bob? Nice to have everybody. Welcome. Drop a like, fam. Subscribe to the channel and turn on those notification bells. Welcome to the channel. Welcome to the live Oscar with all the fam, with all the community. Click the first link down below and sign up, or the link on the top of the chat right now. Sign up on BTCC. Start your trading account. Start trading. I got tutorials coming for you. There's one already there, fam. If you type BTCC XRP, you will find a 24-minute tutorial where I tell you how to do it, how to be a part of this journey. And people are already making money, right? And really want you guys to win. So check it out. There's a bunch of links down there for your service. Am I already adding my positions? No, because you can already see that it was already priced in. Everybody knew a pause was coming. So we'll have to wait, I think, until June for something more spectacular per se, or something that is not expected, right? Because as of right now, the FOMC, the Fed, is really not doing something that people are surprised by. It's not, right? Somewhat weird, somewhat crazy, but it is what it is. Not much that you and I can do, right? If Trump goes gold backed, he will change it all. He'll flip off Jerome Powell. The more wars we get, the worse crypto gets. I know, right? Right now, I saw Pakistan and India, right? I don't know the full story. But I know it's bad. Oh, man. Crazy. What is the color of your drink? It's just water today. Probably why, right? At least it's not blood on the streets, At least. We continue waiting. We are now about 20 minutes to go, guys, and it's going to be pretty good. But there you have it. There you have it. Give me 1 second. Perfect. It's like I've been hearing the same thing over the last 5 months, right? Jerome Powell is just not changing anything. And inflation, according to the data, it's still coming down, which is good. But we haven't seen anything, man. Look, the price is coming down now. Oh boy. This is not what the market wanted. Don't you know, dump it up. You got to dump it up. And don't you know, dump it up. You see, fam? Waiting for a nice entry right here. We'll see if the market starts bleeding, which there's an opportunity, fam. Always more and more and more opportunities. Armenia's watching. What's up, fam? Happy to see you and welcome back. Discount candles, of course. You think he's making a political stance? I mean, if he pauses in June, it's over, man. Trump is going to explode. I mean, the guy is going to be from right now, May, all the way to the end of May. He's going to be saying he has to cut. He has to cut. Yeah. We're going to see Trump complain more on Jerome Powell. Like he was doing it a lot, right? A lot. Then he calmed. He was like, no, it's fine, I'm just saying, I don't want him to be terminated. Because I'm always watching the news, so I'm telling you, I'm paraphrasing what he has said before. But with this, I'm pretty positive he is going to be going back to the heat. Hostile, what's up, buddy? Thank you so much for the kind donation. Global financial market crash in September. Why? What am I not seeing in September? What is happening? What's up, Snakey Eye? Good to see you, buddy. Welcome. Thank you so much for being here, buddy. Yeah, this is something that when I was reading it, I'm like, oh, brother. The risk of higher unemployment and higher inflation have risen. Oh, bro. Jerome. You playing with us. Sponsored by tariffs. When are we going to see, oh, yes, the market is, we've been investing for the last 3 years. We've been doing the best for the last 4 years since the pandemic. We still have inflation. Get ready for a bunch more volatility, guys. That's what I'm going to tell you guys. Get ready for a bunch. I will be here telling you the way it is. Although it's going to hurt. Although it's not going to be what you want to hear. Although you might get angry at yours truly, at the messenger, right? Which I don't make any decisions, but I'll still say it because I don't mind speaking the truth, speaking the facts. That's basically why I'm here. But yeah, it's more waiting for those short-term people, right? For those short-term people, not what you wanted to hear, but for my long-term folks, for my long-term legends, we're still fine. We're still fine, bro. It's true. What's up, doctor? Good to have you, buddy. Welcome. You think XRP 60 cents or better chance that we stay steady? 60 cents XRP? I don't think so, 60 cents. I mean, never say never in crypto. I've learned that too, right? But no, 60 cents XRP, that's too much. You're destroying a lot of wealth at 60 cents. Hate it. What's up, buddy? People who hold XRP in the long term will be rewarded. Want this to crash to buy more. People People want the prices to crash. I get it, man. That's for sure. Let's take a look at Benjamin Cohen. With QT quantitative tightening continuing, it seems likely that altcoin and Bitcoin pairs will continue dropping, and Bitcoin dominance will likely go to 66% soon. Altcoins and Bitcoin pairs will likely drop to 32, currently 34, with an eventual target of 25. Freaking seriously, bro. In other words, altcoin season is not coming anytime soon. That's what he's saying. A Bitcoin maxi like Benjamin Cohen, right? Obviously likes when Bitcoin takes the full piece. That's always good, right? When Bitcoin is doing what everybody wanted. Don't you know? 15 minutes to go, guys. 15 minutes to go. When was that? Is it in June or July? FOMC meeting. Let me see. Yeah, it's in June. So June 17, 18, guys. And then we have July 29 and the 30th. If I go to the CME, $41 days for the next FOMC meeting, right? So with 97%, we got a pause. And now for June, we're getting no. Again, another pause. Huh. I think based on this, no. Where is it? Watch your guru. Here, based on this. The June CME was expecting a cut. It was like 50, 60%. Now it's 27. And pause is back to 71. And now you're going to tell me July is going to be the cut. Of course, freaking seriously. Okay. Wow. That was fast. Okay, that was fast. It just changed. Everything just changed. Okay. So, yeah, right before this pause and the explanation, June was the expected cut. Now it's July. And that is if tariffs can ease up, in my opinion, right? September is already looking at another cut. So July and September is looking like cuts. But right now, the next one in June is not looking like a cut, according to the CME predictions. Well, guys, there you have it. I think the prices still go with M2 with no rate cuts. What's up, Hostile? Oof. Yeah, I mean, by the end of May, we still have other different reasons to believe that the price can go up. But it might just continue to be boring, you know. I wanted some excitement, but nope. The Fed has a lot of control of the prices and the markets, and this MF will do anything except cut rates. About 10 minutes to go to listen to Jerome Powell, and a lot of people are going to be asking questions as far as Trump and cutting. So get ready to hear from, you know, the head of the Federal Reserve, as we all do. It's tradition here in the channel, fam. Very happy to have you. Welcome, welcome. Another month of chop. Another month of not much going on from the Fed. That's what it looks like. All political. They cut 0.5 before the election, and the economy in much better shape overall now. It was. They cut before the election. Yeah, you remember that? I remember that. Right before the election, they cut. And then, if I'm not mistaken, I mean, there was an FOMC just days after the election. CME. Oh, man. Should people wait to buy until we get the rate cuts? Mega D. I think people should do whatever, of course, they want. There's all kinds of opportunities. Like, we're going to have more chances to buy the dips, because now that we know that we're not going to have a rate cut in who knows when, I think Donald Trump is going to be pissed. He's going to be pissed. He's going to be mad, bro. Like, what he's doing with the trade tariffs is his own way of like trying to fix the market, right? Trying to fix the economy by adding trade tariffs. He can do that. So, but what he cannot do is controlling the rate. That's for the Federal Reserve. And they always say that they're not political, right? But you go ahead and guess. Michael, good to see you, buddy. Welcome back. Welcome, welcome. They cut for political reasons before the election. Now that inflation is going down, they don't want to cut. Makes no sense. Giovanni, good to see you, bro. Bro, other countries already are cutting. Bunch, right? That just makes it more like sweeter, right? That makes it more desirable. Once we have our first cut, it's over, man. It's absolutely over. But I don't want to wait that much. Like, how long are we? Like, next cut is going to be mid-2025? People are going to be mad. People are gonna, I mean, a lot of people will lose their patience, bro. I mean, if right now everybody's telling us, right, come on, where's the pump that you guys are speaking about? Guys, we are waiting on different plays by different, you know, leaders here in the United States, where you are watching, you know, some of you, fam. Shout out to everybody who's watching from other different parts of the world. But here in the United States, Trump can do so much, right? We're all now, our eyes are moving and looking at Jerome Powell. Go back to work. It's true, bro. It's true. You guys don't know what war messed the crypto markets and they pumped the gold. When the Fed does their cut, it's going to be huge. Yeah. President Trump says he's not open to removing the 145% tariffs on China. There it is.
Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
All right. That's a big no. There is. Ooh, yeah, yeah. Sorry, guys. Sorry. What is this? Oh, that's the trailer. Yes. Five more minutes, guys, and we start. 5 more minutes. Are you telling me that I need to cancel the Lambo? That's a good one. That's a good one. There is. Nah, bro, when you default your loan, XRP. guys, where is it? Where did I put it? Guys, look at this. One Lambo with BTCC. Oh, there it is. BTCC right here. One Lambo, fam. One Lambo. I got a few goodies that I brought from Dubai. No Lambo, right? One day, guys. Smash the like button, everybody. Subscribe to the channel. Very happy to have you here. In about 5 more minutes, you and I will be listening to the Fed. And right now, you're seeing some green candles. Everything can change. He's going to be responding to a bunch of questions. And if he sounds hawkish, oh boy. If he sounds dovish, good stuff. We got to pause. People expected that. But now, not looking that we're going to get a cut till July. Till July, guys. What is the time frame for XRP? Go back up to the 3, in your opinion. Okay. Thank you so much, Luke. Appreciate it, buddy. Welcome. The time frame for XRP. Look, XRP can hit $3 today, tomorrow. Like Bitcoin can hit 100,000 today, tomorrow. It's just people with money are waiting for news, are waiting for the right events to come and happen. So when you ask me the time frame, it's not that the price of XRP is gonna take a while to get there. No, it's when those events come and occur, that's when it's gonna happen. It's up to the events to come. It's up to the when we're gonna get a cut, when we're gonna get the ETFs approved, when Bitcoin is gonna be, fully mass adopted, when we have the government speaking more on Bitcoin. Those are the events that we're waiting on right now. Because XRP, Bitcoin, they're all ready. They're all ready to go. I mean, if I had to give you a date, I think one good one will be by the time we get a cut. And that's going to be, looks like July. Looks like July, right? I wish it was right now. I wish it was, we got a cut. Great. We just got a cut. Phenomenal. Let's go. Pump it up. I wish. But no. It doesn't seem to be that way. 2 minutes. 2 minutes. Let's get it. Bam. So happy to have you here. And thank you, Luke, for the kind donation, buddy. Welcome. I hope Trump comes out of nowhere and body slam. doctor says August. I mean, for sure in Q3, Q4, right? For sure, Q3, Q4, we should be looking much better, right? That's the expectation that a lot of people have because, historically speaking, Q3, Q4. This better explode. All right, fam. We'll go ahead and close this. And everybody's gonna be watching right now. I'll go ahead and go mute. And after it's done, we'll go ahead and give you our thoughts. All right? Links down below. Sign up. Start doing it. Start trading. Got some more surprises coming your way, fam. And I'm already getting ready for many, many, many things. God bless, Oscar. Appreciate it. Capo, happy to see you, buddy. Welcome. I'll be happy with a dump or a pump. Better than not moving. Yeah. Yeah, I think I'm buying more today. Just gotta want to see what's up. Because typically, there's a 7 out of 10 chance that we're gonna go down. If we were meant to go up, it would show. You will see. It will show. All right. There you go. Let's go ahead and refresh this just to get the most. There it is. Here you got it. Enjoy, fam.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of
compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago, labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, you know, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by about where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and you know, as that develops, and I can't really give you a time frame on that.
John L.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So to go through 2024 up to the day, we've had you know, unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time. So, again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
Edward.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are, is, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't. And we just don't know. Until we know more about how this is going to settle out and what the economic implications are for employment, for inflation, I couldn't confidently say that I know what the appropriate path will be.
So following on that, just, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're really not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that. But in the meantime, yes, we're watching it extremely carefully, like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that The reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, you know, we're down a couple of trillion. But I get you know, we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. You know, it's you know, we knew doing this in real time that we weren't going to get it perfect, and those kind of you know, after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that you know we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And you know, we dropped out of the network of greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And you know, the risk is if you go for things that are really not on your mandate, you know, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. You know, what we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, you know, wanted to hear it that way, but that's not at all what we meant. So that's just not a correct reading of our, but I can see how, you know, maybe people found that confusing, and you know, we have to take that into consideration.
Jolene.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, you know, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the, you know, a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so you know, we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there will be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So People are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. You know, people are not layoffs, or people are not getting laid off at high levels. You know, initial claims for unemployment are not increasing, you know, in any kind of impressive way. So the economy itself is still, you know, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Chris.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, you know, what kind of interest rate decisions you will make later this year. So does that, you know, in March, there was guidance that 2 cuts might happen. You know, 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
You know, we don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. And you know, we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. You know, it could include us holding where we are. We just are going to need to see, you know, how things play out before we make those decisions.
Great. And just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the 2 goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other, and if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. You know, I think you know what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, you know, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. You know, I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
You know, we don't give Congress fiscal advice. They're going to do. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, you know, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path, and it's on Congress to figure out how to get us back on a sustainable path, and you know, it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And you know, everywhere people were talking about downside risks to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, you know, we wanted to address that forthrightly. We wanted to show that we were there for I mean, we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, you know, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you know, you're at 4.2% unemployment. I think we were in a very different situation now. Now we have a situation where, you know, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I mean, I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is you know, demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less, you know, equally distant and equally or not distant, then we don't have to make that assessment. You know, the assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see, you know, significant deterioration in the labor market, of course that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Clay.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, you know, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic-era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, you know, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, you know, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is entering into beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
You know, I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course, we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decisions. So the volume of the imported goods has increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of the first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or inventories, government. Anyway, it's a cleaner read on private demand, but that too probably was flattered a little bit by by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really going to, I don't think it's going to affect our decisions. I will just say, though, that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney. Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economies. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is, we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses, and so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting, and so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
You know, I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right, though. We had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Matt. Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you're monitoring the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else. And, right now we see inflation, kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, trying to navigate this tricky passage we're in right now, trying to make the right decisions. We want to make the best decisions for the people that we serve. That's what we think about day and night, and this is a challenging situation, and that's 100% of our focus right now.
Let's go to Jennifer for the last question. Chair Powell, Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
Welcome, everybody. Yeah, we're back. Wait and see. I can tell you exactly what I took from this. Thank you for staying with me till the end of the May 7th, F1 Oscar Ramos needs a nap. I'm a little tired, but it's okay. Pushing through. Yeah, so pause. I believe this is hawkish, or this is neutral. This is not dovish. We're not hearing what I believe people wanted to hear. We're not hearing that, guys. Obviously, questions as far as Trump, questions about cuts, no questions about Bitcoin, no questions about crypto, zero. He is not, I mean, he hasn't met with Trump in all this time, in the 4+ months, 100 days. So it comes to show that Trump also, he's not willing right now to have a chat with him because he's not pleased, right? Like I told you guys, it's going to be choppy. I think it's going to be more drama. Jerome Powell, you can hear him. You can feel it. He's not in any way liking this relationship, the way his tone is now. Obviously, Jerome they met right in the first term because he didn't know Trump. He didn't know how he was going to be as president. Now he knows Trump. Now he knows what he's about. So the two of them are old guys that are too proud, too cocky, whatever you want to call it. And they obviously don't want to give in. And Jerome is like, don't tell me what to do. Don't tell me what to do, man. I do whatever I want to do. Whatever my board, my committee tells me to do. And Trump is like, dude, I'm going to replace you, right? In due time, when your term expires, you're gone. And we'll see if the guy wants to stay. I mean, you just heard the question. He's going to stay till the 2028, not acting as the chair, but still on the board. People who vote, right? So, inflation, risk have risen. He is not telling us if it's going to be a July cut. There's, like, we got to look at more data, even more data and more data and more data. Jerome Powell, oh boy. Guys, I wish I was a little happier, but no, I mean, I'm like him. I'm just like, we don't know. We don't know. Like, I wish I knew, but we don't know. Uncertainty. Right now, we don't know what's going on. Right now, the economy is okay. He said it. The economy is okay. He said it many times, right? But he's not praising Trump. Yeah, I mean, you feel me? He's not like, the economy is good. I think the administration is, no, zero with that. So, yeah. Jerome Powell isn't going anywhere. Trump will not fire him. Don't get distracted with the reactor. No, he cannot fire him. We know that, yeah. Well, June is supposed to be a pause again, and July, that's when the cut, it got pushed one FOMC meeting, right? We'll see. Everybody closing the poll right now. Drop a like. Subscribe to the channel. Turn on those notification bells. And a reminder, fam, sign up. Links down below. Thank you, guys. Start trading. This is the time. I'm not buying right now. I'm gonna wait. I told you that I wanted to buy, but no. I think we might see more blood coming in. That's my perspective. That's my take, not financial advice. I'm gonna wait it out right now. If you're on my Discord, if you're on my X as a subscriber, you will be the first one to know when I buy, when I trade. So shout out to all my private community members, right? But I'll tell you guys in the next episode. 2 hours live. I'm out, fam. Thank you so much to everybody. We're back in the studio. We're back from Dubai. I want to say thank you to all the awesome donors, to all the subscribers, to all the people here. Definitely, fam. It's been an interesting journey, and we are not giving in. We're not, quitting. But if I had to guess, in the next couple of hours, I'm ready for more blood on the streets. You guys have a good one. Thanks so much for coming in. Like and subscribe, and I'll see you next time. Peace. Let's go. Another FOMC meeting in the books. We did it. Peace. Don't you know? Pump it up. BTCC. And when Lambo. Lambo's coming, but we need that bull market, right? Ciao, everybody. Take it easy.